Students, I am Sivaranjani. Today we are going to see the macroeconomics. Okay, macroeconomics la நம்ம national income பார்க்க போறோம். So national income ரொம்ப important chapter for CBSE students. Term 2 ல subjective paper எழுத போறீங்க. So national incomeல இருக்க எல்லா termsமே உங்களுக்கு தெரிஞ்சிருக்கணும், right? So first national income. National income அப்படின்னா என்ன அப்படின்றத பார்க்கலாம். Okay. So அதுக்கு முன்னாடி some terms we have to know that. Okay, first goods என்ன, final goods, intermediate goods அது எல்லாமே தெரிஞ்சாதான் national income நம்மளால ஈஸியா என்னதுன்றத பார்க்க முடியும். So goods அப்படின்னா என்னது? So things we are making, we are going to sell, we are consuming something which is called as goods and services, right? So in goods you have two types, final goods and intermediary goods. So what is final goods? Final goods are two types. Okay, final goods are two types, consumer goods and capital goods. Consumer goods அப்படின்னா என்ன, capital goods அப்படின்னா என்னன்றத நம்ம பார்க்கலாம். Consumer goods are goods with the directly household is consuming something, that is called as consumer goods. Capital goods means it is used for investment of other goods, that is called as capital goods. And intermediary goods is nothing but it is goods meant for resale. So there is a intermediate goods for another goods to produce and resale, that is called as intermediary goods. Okay. Next one is final goods. What is final goods? Final goods are those goods which are used either for direct consumption or for investment. Okay, so either it will be a direct consumption or it will be for investment, that is called as final goods. I told you, no, in final goods you have consumer goods and capital goods. Okay, if milk and bread or final goods purchased by household for consumption. So household, we are consuming milk, bread, right? So that is called as final goods. We are consuming directly is called as final goods. But machines and equipments is also final goods, but it is bought by a firm for capital formation, because it is bought by some company, some firm to produce some other goods. It is called as final goods. Okay, final goods is nothing but it is used either for direct consumption or for investment. Okay, so for example, the final, see here, this is a consumer goods. So this is a supermarket. So households are going and consuming something, that is called consumer goods. Capital goods means this is also a final goods. This is also produced goods, final goods, but this is used to produce some other goods, that is called as intermediary goods, that is called as capital goods. Okay. So next one is consumer goods or consumption goods. Consumer goods or consumption goods. The other name for consumer goods is a consumption goods. Okay. Consumption goods are those goods that satisfy the wants of consumers directly. Okay, the wants of the consumer directly, that satisfy the consumer want directly. For example, television, mobile phones, etc. It has the three types: durable goods, non-durable goods, okay, semi-durable goods. Durable goods means it has a long period of time. Semi-durable means it has a short period of time. Non-durable is a very short period of time. For example, perishable goods and all is a non-durable goods. Okay. Next one is capital goods. What is capital goods? Capital goods are those final goods which help in the production of other goods and services. For example, machines, tools, equipments. Okay. So the machinery is the final goods of one company, but it is purchased by the another firm to produce some other goods, that is called as capital goods. It is an asset. Capital is nothing but an asset. Okay, so it is a capital goods for another company, that is called as capital goods. Next one is intermediate goods. Intermediate goods is nothing but it is used up in the production process, and goods that are brought for resale are called intermediate goods. Okay, so intermediate goods are when a person is buying a goods to reproduce some other goods, that is called as intermediate goods. See the picture, this is a wheat flour. The baker brought wheat flour means that is the intermediate goods, because this is used for making some other goods, that is called as intermediate goods. Okay, goods mean for resale, which is called as intermediate goods. Next one is difference between final goods and intermediate goods. Final goods and intermediary goods. See here, this is the intermediary goods and this is the final goods. Goods that are used in the production and goods that are brought for resale. Okay, they are used as a production and they used as a resale. That is called as intermediate goods. Final goods means it is used for either consumption or for investment. If the household is consuming directly, it is called final goods, and it is used for the investment purpose, that is also called as a final goods. And they are not included in the national income. Intermediate goods are still in the production boundary. They are not come into the final goods. This is still in the production boundary, so that is not included in the national income, still in the production boundary, right? So this is a final goods. It is produces. This is a national income, included in national income. They cross the production boundary. For example, bread is purchased by a restaurant. It is an intermediate goods because this bread is maybe it will be used for making sandwich or anything to resell again. So that is called as intermediate good. Bread purchased by household. This is a final goods because the household is directly consuming the bread. That is called as final goods. This is the difference between intermediary goods and final goods. Okay. Next one is stock variable and flow variable. What is stock and what is flow variable? So stock variable is nothing but it is measured at a point of time. At a particular point of time, it will be measured. The variable can be measured at a particular point of time because it is a static concept. It is mentioned, it is measured in a particular point of time, so it is not time flexible because for example, population of India on 20th March 2017. At a particular day, they are calculating the population. Okay, so this is called a stock variable. It does not change. Flow variable is a continuous process. It is measured during a period of time. Maybe 1 year, maybe 2 year, 3 year. It is called as flow variable. It is a dynamic concept. It is time flexible. Okay, for example, number of births during the year 2017. For 1 year, they are calculating the birth. For 1 year, they are calculating the birth. That is called as stock and flow variable. Okay. Next one is investment. Let's come to investment. What is investment here? Investment is a addition to the capital stock of a company. Additionally, we are giving some money as a capital of a company, that is called as investment. So in investment, we have two types, gross investment and net investment. Gross investment is nothing but total addition made to the capital of a stock, capital stock of a company. Okay, totally how much we are investing is called as gross investment. Okay, it includes fixed asset and unsold stock. But what is net investment is the actual addition. Actual addition means after deducting depreciation from the gross investment, you will get a net investment. Okay, so net investment equal to gross investment minus depreciation. After deducting the depreciation from the gross investment, you will get a net investment. Okay, so in numericals, it will be useful net investment equal to gross investment minus depreciation. Okay, this is the formula for net investment. Next one is depreciation. What is depreciation? Do you know what is depreciation? Depreciation is a fall in the value of fixed asset. Why the value is falling? Wear and tear. Because we are using the things again and again, so it is normal wear and tear. Passage of time, the time is passing, so the value of asset will be decreased. Expected obsolescence, which is getting old, the meaning of expected obsolescence is getting old, so the value will be decreased. So depreciation refers to a fall in the value of fixed asset as a result of normal wear and tear, passage of time and expected obsolescence. Okay, it is also called consumption of fixed asset. Okay, so they won't give directly the depreciation is 20,000 or 30,000 in numerical. They will tell it as a consumption of fixed capital, like that only. Okay, next, capital consumption allowance. The another name of depreciation is capital consumption allowance, like that they will give you. Okay, so these are all called the depreciations. Okay, next one is circular flow of income. Come to the circular flow of income. What is circular flow of income? The national income. What is circular flow of income? So it is a diagrammatic presentation of interdependence between different sectors of economy. But it is a closed economy, so the circular flow of income is between two sector model only. Namely, one is household and second one is firm. Okay, it is a closed economy. Okay, so see the diagram. In the diagram, we seen right circular flow of income. What is circular flow of income? So here, the household is giving land, labor, capital, entrepreneurship to the business firms. The business is giving the flow of goods and services to the household. The outer circle of this is called as generation phase. Okay, this is called as generation phase. It does not involve money because they are giving the land, labor, capital, entrepreneurship. Business is giving the flow of goods. This is not involved in money. This is called as generation phase. This is a real flow. Okay. So next one is a nominal flow, which is the business firm is giving a factor payment as rent, wages, interest, profit in the form of money, and the household is giving a consumption expenditure in the form of money. It involves money. Okay, this is a disposition phase. Household to business firm in consumption expenditure is a disposition phase. Disposition phase. Okay, and this is called as disposable phase. Okay, see here, real flow. Real flow is a factor services like land, labor, capital, entrepreneurship to the firm. It is a generation phase. It does not involve any money, use of money. My nominal flow is a distribution phase. That is a distribution. Household, we see no the interest payment. That is a rent, interest, wages, profit. So that is called as money flow. That is a distribution phase, and the dispensation phase will be the consumption expenditure. Here the money flow between the sectors. The two sectors are handling the money flow here. This is called as nominal flow. Next one is normal residents. What is normal residents? Normal residents are those individuals or institutions who normally reside in a country more than 1 year. So who are living more than 1 year in that country, their economic interest lies in that country, they are called as normal residents. Okay. Next one is domestic territory. What is domestic territory? Land within the boundaries of a country. Okay, so land in the borders of the country. This is called as domestic territory, and the normal residents only operated and owned the ships, aircrafts and all. Okay, this is called as domestic territory. Next one is net indirect tax. This is one of the important term you have to keep in mind, that what is net indirect tax, which is a difference between indirect tax paid by the firm to the government and subsidies paid by the government to the firm. Actually, the net indirect tax equal to indirect tax minus subsidies. This is the formula. Okay. Actually, the net indirect tax means indirect tax. Indirect tax means the firm is paying to the government. Subsidies mean the government is paying to the firm. So the difference between the indirect tax and subsidies is called as net indirect tax. Okay. This is also used in our numericals. Okay. So net indirect tax equal to indirect tax minus subsidies. Next one is factor income and transfer income. Difference between factor income and transfer income. What is factor income and what is transfer income? So income earned for providing factor services is called a factor income. What is the factor services mean here? Factor services means, what is factor of production? Land, labor, capital, entrepreneurship. Okay. So here, so from land we will get rent. Labor, we are giving labor, we get wages. Capital means interest. Entrepreneurship, profit. So this is the income earned for providing, we are providing factor services like land, labor, capital, entrepreneurship, and we are earning rent, wages, interest, profit. This is the income earned for providing factor services. So here income earned without providing any productive services. In transfer income, they won't provide any services, but they are earning income, that is called as transfer income. This factor income is included in national income. Transfer income is not included in national income. Okay. So for example, factor income is, as I already told, rent, wages, interest and profit. In this transfer income, unemployment allowance, old age pension and scholarship. We are not giving any productive services, but we are receiving the money. That is called as transfer income. Okay. Next one is net factor income from abroad. What is NFIA? Net factor income from abroad. It is the difference between factor income received from the rest of the world. We are receiving from abroad, and factor income paid to the rest of the world. We are paying to abroad. That is a factor income. As I already told, what is factor income? Factor income earned from abroad minus factor income paid to abroad. You will get a net factor income from abroad. This is also important. Okay. So net factor income from abroad means factor income earned from abroad minus factor income paid to abroad. You will get a net factor income from abroad. Next one, components of NFIA. Components of net factor income from abroad. What is components of NFIA? So see here, net compensation to employees. What is net compensation to employees? Wages earned by Indian residents outside India. Wages earned by foreign resident inside India. In India. Okay, we are earning from outside. The foreign residents earning from India. That is called as net compensation of employees. And net income from property and entrepreneurship, which is net income, rent, interest, dividend. That is the net income by Indian residents abroad. We are earning from abroad. Okay. But the foreign residents earning from India. That is called as net income from property and entrepreneurship. Net retained earnings. Retained earnings of Indian companies located abroad. The companies are located abroad. The foreign companies located in India, that is called as net retained earnings. Okay. Do you understand? Do you understand? Next one. Okay. Next one is national income and related aggregates. Okay. So what is national income? You have incomes, I have some incomes, so nation also have incomes, right? So that is a national income. So gross domestic product at market price, GDP. What is gross domestic product at market price? Okay, it is a market value. Okay, it is a market value of all final goods and services produced within a domestic territory of a country during a year. It includes net indirect tax. As we already seen, all the terms like final goods and services, domestic territory, net indirect tax. So, what is gross domestic product here? It is a market value. The main thing is a market value of all final goods and services. Okay. So, at the factor cost, GDP at factor cost means what? GDP at factor cost means nothing but money value of all final goods and services. Okay, produced within a domestic territory of a country during a year. Okay. So if you find the GDP at factor cost in numericals, I am saying if you want to find the GDP at factor cost, GDP at market price minus NIT. NIT is nothing but net indirect tax. So gross domestic product GDP, it includes net indirect tax. It does not include NIT, which is you have to deduct NIT from GDP at market price. You will get a GDP at factor cost. Okay. Next one is net domestic product at market price. Same net domestic product is same as gross domestic product at market price, but after deducting depreciation you will get a net domestic product at market price. After deducting depreciation you will get a net domestic product at market price. Okay, same as net domestic product at factor cost. After deducting depreciation you will get a net domestic product at factor cost. Okay. Next one is gross national product at market price, gross national product at factor cost. Gross national product at market price is a gross market value, total market value of all final goods and services by normal residents of a country during a year. It includes net indirect tax. So GNP at market price is equal to GDP at market price plus NFIA. Okay, NFIA is a net factor income from abroad. So GNP of market price is equal to, you have to add NFIA to GDP at market price. Okay, again same gross national product at market price means GNP minus NIT. So you have to find GNP market price, and after deducting the NIT you will get a GNP at factor cost. It is a gross money value. It is a gross market value. It is a gross money value. These are all the terms you have to understand in this lesson, and also you have a numerical part. If you want, you can ask me. I will post the numericals in another video. Okay, so this is a numerical value added method, output method and all there. So if you want, you can ask me. I will post the video. I hope எல்லாருக்கும் புரிஞ்சிருக்கும் நினைக்கிறேன். So thanks a lot for watching the video. The video உங்களுக்கு பிடிச்சிருந்தா like, share and subscribe. Okay, thank you.